Good morning. I'm Wayne McPhee. I'm here with Brian Haratsis, Chief Economist for MacroPlan Damasi. And Brian, thank you for coming in for our little coffee and chat segment. Brian, as a Chief Economist, tell me a little bit about your background and what you do as a Chief Economist with MacroPlan.
Well, our economics is really related to property, and so our forecasting relates to property. And so a good example would be if we look at resources in Australia, whether it's iron ore or LNG, what we look at is how is that industry working, what does the demand for that industry product look like, and how would the demand for those kind of products relate to the property industry. And it could be via, for example, residential development in the Surat Basin. It could be marine development in the Pilbara. It could be office floor space in Gladstone. But you need to understand the fundamentals of the industry so that you can forecast what the likely property impacts would be.
Right. So let's start with one of the bigger questions. What would be your outlook for Australia for this coming year economically? Are we going to go up, stay the same, or disappear?
Oh, we're not disappearing, Wayne. The consensus at the moment between most of the economists is that growth would be somewhere between that's gross domestic product, between 2 and 3.5%. Most economists are thinking around 3. The long-term trend in Australia is around about 3%. For 2014, it's actually improving. The consensus would be probably 3 to 3.5% GDP growth, which would put Australia back on its long-term trend.
Right. How much is that affected by what happens in China?
Well, a lot. Typically, most forecasters would tell you somewhere between 0.5 and 1% of gross domestic product could be switched on or off, depending on Australia's export capability, and that really depends on commodity prices. And realistically, you're talking about iron ore and coal.
Okay. The iron ore price has done a bit of a seesaw from about $86 back in September last year. It's back up over $150. When it went down to $86, the mining boom was over.
That's right.
Now that it's back up over $150, is the mining boom back on?
The mining boom never started. We are in a situation at the moment where capital expenditure in Australia is still, this is on new projects, is still at historically high levels and will remain so for at least the next 4 years. So what's not widely understood is that the idea that the mining boom is over is the idea that after this set of projects that's going on around Australia, and by this set I mean not just iron ore, LNG, I mean also rare earths and alumina, and there's a wide range of commodities in this, that after about 2018 it's difficult for the marketplace at the moment to see that there's a new range of large projects coming. So we've got at least half a decade of historically high capital expenditure and requirement for very high levels of staffing, and my expectation is that the amount of employment in the mining sector will continue to increase quite substantially over the next 3 years.
So again, getting back to this common statement that the mining boom is either off or on, and you say it's neither, this is basically because this capital expenditure is a long-term process rather than a short-term window as things happen.
Well, that's absolutely right. And so to give you another example, and Queensland's a great example where a number of new ports will be developed. Now, we know that most of that port development work hasn't started yet. We know that there's new rail required. We know that hasn't started yet. So what we do know is that in the long run there will be major project development. In the short run, we know we've got at least 5 years to run. What really is up for grabs is what happens after the next 5 years.
Right.
And what you read in the papers is an interesting amalgam of what's happening to coal. And if you have a look in Australia, and from a Queensland perspective, as you well know, it's still widely known that BHP, for example, will take another 18 months to pump the water from the floods.
That's right.
To get the coal capacity up. So of course, our coal exports are down.
Yes.
And so the papers say, oh, coal exports are down, the industry's in trouble. Well, yeah, coking coal prices have come off. But that's because the demand for iron ore came off. But that's because there was a political change in China.
Yes.
And the politics of that are that this new administration wants to ramp project work back up again. And so the current expectation is that China will go back to 8 to 8.5% growth.
Yes, yes.
And if China's running at 8 to 8.5%, so long as the rest of the world's intact, Australia will run at 3 to 3.5% GDP, which is our long-term growth rate, which is very hard for us to grow a lot faster.
Yes.
And the reason for that is we have very tight immigration laws in Australia, so it's very hard for firms to get staff,
Yes.
very expensive for firms to get staff. So what happens is Australia becomes far more predictable.
Yes.
Because we know how to grow at 3.5%, 4% in those bands. We know that our immigration will ramp up from around 180,000 people a year. This is permanent migrants.
Yes.
To 220. The current government forecast is that it goes from 180 to 220 by 2014. So there's a ramp up in permanent migration, and that's permanent skilled migration in Australia. And the reason for that, the mining industry.
The mining industry.
So if the boom's over, why are we doing this?
Yes.
The boom actually, the impacts of the boom haven't been felt yet, because what we've seen in Australia are mainly the price impacts from higher commodity prices, not the long-term investment and economic multipliers from the major capital expenditure. That's
Right.
what we haven't seen yet.
Yes.
So what we've got here is a newspaper and a media that don't understand the differences between the commodities and the differences in the viability of each of the commodity types.
So when we're looking at coal, especially coking coal,
Correct.
we should be looking at iron ore as an indicator.
That's right, as your long-term indicator. Because as you see the demand for iron ore increase, which it will, and if you looked at any of the forecasts, this is the official, say, BHP or Rio forecast, they're all for significant increases in world demand for iron ore, probably out to 2025.
Right.
Already, and so and the industry's ramping up towards that today.
Yes. So
Yeah.
so where does Australia sit in the world as far as iron ore production? Are we a major player, or
We're the largest exporter of iron ore in the world,
right?
as in coking coal.
Yes.
Yeah.
Yes.
So
So
we will become the second largest producer of LNG, according to BRI, by about 2025.
so
Australia's becoming an energy-producing nation and one of the most significant in the world.
so if Western Australia is the iron ore export capital of Australia, if you like, would it be fair to say that most of the coal comes out of this Queensland area, or is it coming from other places?
Oh, Queensland, New South Wales, 80% of the northern New South Wales, Queensland, and it's the same, and it's actually realistically the same supply base.
Right.
So the answer is yes, and it's quite concentrated. And it's a little bit like your LNG in the Surat Basin, where actually, whilst there's exports from Karratha, or from Gorgon,
yes.
right, and the new project's Prelude, and there'll be others that are coming up as well. The big difference is that the Surat Basin is actually connected to the eastern gas distribution market as well. So
Yes.
the Surat is not only export, the Surat's going to be a major domestic. And from that point of view, it's got this huge advantage insofar as it's playing to two different markets.
Yes.
And I don't think that's widely understood in Australia as to how significant that is.
That's right. And I must admit, until I started looking at some of the pipeline maps and saw the connectivity of those pipelines to some of the pumping areas in the Surat Basin. There's a whole network that goes down through Newcastle, Sydney,
Melbourne. Yeah.
and I think there's a proposal to go across to Adelaide.
Yes.
As well. How do you see the Surat Basin and its role playing out in providing these sorts of gas and coal resources moving forward? You've already done a study on this, MacroPlan have already done a study on this. So how do you see this playing out over the next 5 or so years?
Well, I think the industry is actually going to work to plan. So the projects that have actually been announced and that are actually underway, and in that study, by the way, we've actually looked at each of the projects and we've verified that they're actually happening, and we've talked to the contractors so that we know who's spending the money. We know what banks they bank with in terms of understanding where their capital's coming from, so we can be quite precise about what we think will happen based on what you can know about the next 5 years.
Right.
And the next 5 years looks pretty good for the Surat Basin, as it does for the whole eastern gas distribution market.
Right.
So that looks strong. Coal is very, very interesting in terms of coking coal, and I think if we look forward, say, to April, May this year, and what we'll begin to see perhaps export starting to increase. There was a small increase in the last quarter of last year, so I think that's very positive. I think as the impacts of Cyclone Yasi really start to wear off, and we've still got 18 months of that, we might see some interesting increases in volume as well.
Just on that, though, I don't think people listening or seeing this actually appreciate that Yasi was, nearly 2 years ago.
That's right.
And they're still pumping out some of these open cut coal mines in central Queensland, aren't they?
That's correct. There's a couple of the major mines, the BHP Mitsubishi, for example, has got 18 months to go, I understand, to complete pumping. And the reason for that has been that environmental approvals they're quite difficult to get because some of the water was saline.
Right.
So
they couldn't just pump it out onto the ground and let it dissipate across the fields.
No, that's right. And it's a bit similar to the issues in relation to the expansion of in the Surat Basin, where some people say, well, the whole issue of fracking is a problem, and it's not. The environmental approvals are in place. The projects we're talking about are all fully approved and moving ahead. And so, as things move over time, one can expect that coking coal will increase its output and increase in value.
Yes, and there's something like, I think, 13 proposed coal mines around between Miles and Wandoan, something like that.
That's right. There's about, I think it's at least 13. Plus, you've got your wind. You've got your power generator. You've got your solar plants. You've got the proposed new electrical generation plants. There's a number of different projects happening through there, and northern New South Wales. And it's really important that the Surat Basin, whilst at one level it is in Queensland, and it's drive in, drive out, and mainly from quite localised areas because of the OH&S. In other words, I don't know if people realise you can only travel 45 minutes after a shift.
Yes.
So from that point of view, it's got a level of self-containment. But from a second point of view, which is the connection to northern New South Wales, there are labour forces that move between both. There are contractor groups that move between both. What's actually developing is a big energy hub.
And I don't think a lot of people understand that. And that's a very critical point, isn't it? When you're looking at the townships like Chinchilla, Miles, Wandoan. Basically, people can't drive from Toowoomba each day.
No, they can't.
And back again. They actually have to reside within that ring around that town, don't they, because of those rules? Yes.
That's absolutely right. And of course, the other thing that's really not understood either is that, unlike LNG in the Pilbara, there's an ongoing demand for drilling.
Yes.
On a two yearly basis. So you've got much lower capital costs, but much higher operating costs.
Yes.
And what does that mean? It means more labour on the ground. So you don't get the big construction peak, but you get a much larger long-term population.
Yeah, and that's a very important point, though, I think, that you raised there. That we quite often get asked about the longevity of this. What is the longevity of the gas in the Surat Basin and so on? And I was staggered to learn late last year that each well actually has to be rebored every 2 years.
Correct.
So the guys that are digging the wells today have to go back around and redig them 2 years from now to maintain them.
That's right.
So the operational staff, they're not going anywhere, are they? They're not. It's not like I sort of the construction people fly in and fly out generally.
That's right.
But the operational staff, it's just impractical for them to do that. They actually have to be more permanent in the townships.
Well, that's right. And what that leads to is the development of a contractor industry in the townships. Once you get a contractor base, then what you begin to do is get a supply chain happening. Now, that hasn't happened yet.
No.
But what I'm tipping in the next 10 years is that particularly chinchilla,
Yes.
that it'll start to become an interesting supply chain node. As Roma Roma's a little bit eccentric to the whole well drilling at the moment, so it hasn't really had the kind of growth that it might have had, and you can see that from the if you looked at the sort of sales and values there.
Yes.
But if you stay central to the main drilling, what you'll see is a value chain, and when we see a value chain, you'll see longevity, because you'll get schools, doctors, and then you get a community building. And I'm tipping Queensland will be the kind of place over time where you'll start to see much more integrated economies, where there will be some genuine agricultural development. There'll be genuine resource development, and not so much around chinchilla, but in other locations there'll be tourism as well. So what you've got is a far more complex and integrated economy. It's not just a resource-based economy. And so part of the sort of understanding as to how the communities will grow through those southern parts of Queensland are taking a view on not just the area itself, but its role.
Yes.
Because you can see a place like Toowoomba growing at a rate of knots.
Yes.
But as we've said, those people working in the mining industry can't live in Toowoomba.
No.
So what we're seeing is very, very high levels of growth. I mean, for example, I know there's just been a flight, it's either Qantas or Virgin, direct flights Sydney to Toowoomba.
Yes, yes.
That doesn't happen and without demand.
If you could just summarise quickly where you see first of all the Australian economy going over this next 12 months, and then if you could hazard a guess about the Surat in the short and medium to long term.
I think the best word for the Australian economy is stabilising at long-term growth rates, and that would be a gross domestic product of somewhere between 2.75 and 3.25 is where I think that would be. I expect unemployment to stay around the current levels. There'll be some job losses in some sectors, but there'll be growth in other sectors. So I see unemployment levels probably staying the way they are. I think interest rates will probably come off a bit. But one of the things that isn't widely understood about the Australian economy is that the expenditure cuts last year on a historic basis in Australia took, as a percentage of the total, was the largest in Australian history. The fiscal stimulus taken out of the economy was enormous.
Right.
And so what I'm expecting, because we're not running on a surplus, and we won't be running on a surplus in the next 12 months, according to the government now, I'm expecting expenditure stimulus to happen. I'm expecting China to grow at around 8%, which is its long-term trend rate. So from that point of view, if I map that on to what does it mean for the Surat, I'm expecting all of the current projects to run the way they are. I'm expecting new contracts to be signed, despite the fact that I'm not forecasting that's what has to happen. I'm expecting long-term sales rates to be maintained in terms of residential property. I'm expecting some growth in prices, and the reason for that is there will be some supply constraints, and we've seen that issue that you spoke about in chinchilla, and I'm expecting some other major contracts to be made available, and I'm expecting more demands with some speed humps in the way there.
Yes, true. These things never run in a straight line, do they?
They don't.
No.
The other big thing to talk about is, of course, the Queensland economy itself, and the Queensland economy is coming out of perhaps one of its worst periods in a long time. The Queensland economy has always been a very cyclical economy because of the resources. It has been seen as a resource and a tourism economy, but as it's becoming a far more highly integrated and far more important resource economy, but based on energy, with long-term contracts, that volatility will come out of the cyclicality.
Okay. Right.
And so what I'm tipping is that the gross state product here could get back to 4% or over in terms of its growth.
Yes.
I've also recently just seen some interesting increases in the number of people moving to Queensland from other states. So while you read the Courier Mail at the moment, things are bad on the Gold Coast and things aren't good on the Sunshine Coast, this economy has actually started to crank. And again, I'm thinking it'll move back into its long-term growth trajectory.
Right.
And I think if we have this discussion in 12 months' time, I think what you'll find is that everything in the economy and in terms of the Surat itself has really begun to move to the next step. And then I think we'll have an interesting discussion next year about confidence in the economy. What does that mean about maybe the new projects, which at the moment people can't see the new projects, which is after 2018.
Yes.
What do we now talk, what does that future horizon really look like, Wayne?
Yes, yes. Brian Haratsis, thank you very much for joining me for our coffee and chat today.
Thanks, Wayne.